Good morning, everyone. Welcome to my channel, Corporate Bytes, and I'm your trainer, Kabir Khan. And so today we will be discussing about the accounts payable process, which is the continuation of the yesterday's video. So let's get started. So let me share my screen. Yeah. Yeah, so this video will be a continuation of the yesterday's one. So yesterday, just to give you an overview of what we discussed. So yesterday we discussed about the various accounting processes related to the multinational companies, and we discussed about the P2P, O2C, and record to report process and the FP&A. So today we will be discussing in details some more details about the account payable process. So let's get started. Yeah. So yesterday we discussed like the P2P is nothing but the procure to pay, and which is in another term called, we can call it like the accounts payable. And accounts payable, it's the amount due by an organization to its vendor for the products or the services procured on credit, and the AP is classified as a liability account. So accounts payable is classified as a liability account, and it is, we all know, like it is presented in the balance sheet on the credit side under the current liability, because for this liability accounts payable, the firm is expected to pay the obligations within the period of the 12 months. So for that reason, it is considered as a current liability. So yeah, before we start the P2P process flow, so there are basic terms which we will come across in the accounts payable process, or I can say like procure to pay process. So first understand these basics before we proceed further. So first thing is like we need to understand the requisition note. What exactly the requisition note is? A purchase requisition form is an internal document used by an employee purchase goods or the services on behalf of their firm. For example, if I am working in XYZ organization and I wanted to purchase 100 laptops, so first thing what I will do, I will raise the requisition note on behalf of my company XYZ. And so these purchases may be for business operations such as the office supplies, inventory, or the manufacturing. It depends on the organization type, whether the organization is the product based or the service based. So it depends on that. So here you can see, yeah, the process flow. So whenever there is a requirement of the goods or the services, first thing, submission of the purchase requisition form. So whenever we want to purchase anything, so we will raise the requisition form on behalf of the firm. Then we will take the approval from the department managers. I mean, the for this requisition note will be sent to the purchasing department, and the purchasing manager will be there. So he gonna approve our requisition, and then stock taking. Then we will take the stock, and then screening by the purchasing department, approval from the purchasing department, then generating the purchase order, and then receipt of the goods. So this is the total flow on how it works, right from the requisition note until the invoice gets paid. So this is how the purchase requisition note looks like. So company name, purchase requisition, department to be delivered, number, serial number, date required, and the items number of the quantity, item number 1, 2, 3, like that, and how many quantities we need. And we need to provide description, coding, and the purpose why we need certain quantities. And this will be approved by the purchase department. Yeah, so this is all about the requisition note. So in short, requisition note is issued by an employee on behalf of the firm, and it will be shared to the purchasing department or the procurement department, we can say. So let's move to the another term. Another thing is like purchase order. So I think accounts payable or P2P team will come across this purchase order n number of times. So let's understand what this purchase order means. In short, we'll call it like a PO. So a purchase order or a PO is an official document issued by a buyer committing to pay the seller for the sale of specific product or services to be delivered in the future. So they are the important tool for buyer because they formalize the requirement and pricing and serve as a legally binding document of the goods or the services that were ordered. So what happens? So whenever we want to buy anything, so we will raise the requisition and that requisition will be shared to the purchasing department. So once it is approved by the purchasing department, they will find the suitable suppliers with the best quotation in the market, who is offering at the best prices. And based on that, they will, once they find the suitable supplier and they select the supplier, after that, they will raise the purchase order. So who will raise the purchase order? So in short, we can say buyer raises the purchase order and this purchase order will be shared to the seller for in order to get the goods dispatched. So it's like an officially confirmation from the buyer to the seller that we agreed to buy the goods from you at so and so prices at so and so quantities. So this is the purchase order sample here. So company name, purchase order, customer ID, delivery date, shipment. So it contains all the details along with the item description, quantity, per unit price, total price, including the taxes, shipping charges, etc. So this is how the purchase order looks like. So in short, it's like an official document issued by the buyer to the seller. So this is about the purchasing order. So let's move to the another slide. Yeah. Third is the invoice. So what exactly the invoice means? An invoice is a document given to the buyer by the seller to collect the payment. So purchase order will be sent by the buyer to the seller, but the invoice will be sent by seller to the buyer. So an invoice is a document given to the buyer by the seller to collect the payment. It includes the cost of the product purchased or services rendered to the buyer. Invoices can also serve as a legal record if they contain the name of the seller and the client description and price of the goods or services along with the terms of the payments. So let's see the sample of the invoice, how it looks like. So here is the invoice, your name, business name, address, phone, email ID, and then bill to address. Here we can find the buyer's details, invoice number, invoice and payment due. So based on the payment due, so usually we will consider 30 days from the purchasing. So if we are making the payment within the 30 days, we need to usually pay the invoices within the 30 days of the time. So this is the item one, item two, quantity, prices, and the amounts. So this is how the invoices looks like. So I don't want to go in much details on the purchase order because we have the different types of purchase orders like the here just I gave the overview of in just the purchase order definition, but there are the different types of purchase order like the standard purchase order and the after the fact purchase order, blanket purchase order. So I don't want to go into those details. And for the invoices also, we have the different types like the PO based invoice, non-PO based invoices. So that we will discuss it later. Now let's understand, and this is the one of the most important, I think, interview question also, difference between the PO and the invoice. So like we discussed, purchase order is issued by the buyer to the seller, whereas the invoice is issued by the seller to the buyer. And order confirmation sent by buyer to the vendor, payment remitter sent by the supplier to the buyer, generated when the buyer places an order, generated after the order is fulfilled. So usually what happens before the delivery of the goods, buyers sends the purchase order to the seller, but for the invoice along with the goods, seller sends the invoice. So for that reason, we need to match the purchase order with the invoices. So the difference between a purchase order and an invoice is that a purchase order is issued by the buyer and is to be fulfilled by the vendor, whereas the invoice is issued by the vendor after fulfilling a purchase order and must be paid by the buyer. So this will help in overstocking of the prevents from overstocking of the inventory, and the invoice helps in duplicating and the overpayments. And it is easy for tracking purpose also, because on each invoices we will have the purchase order numbers. So that will help in tracking purpose also. So in short, we can say purchase order is issued by buyer to the seller, and the invoice is issued by seller to the buyer. Yeah. So now let's come to the most important slide on the P2P process flow. How exactly the procure to pay department works. So first step will be, for example, if I wanted to purchase the 100 laptops for my company or on behalf of my company. So what I will do, I will raise a requisition note. First thing what I need to do, I need to raise a requisition note. So once I raise the requisition note, this requisition note will be sent to the purchasing department. So in the second step, you can see purchasing department, or in other words, we can say procurement department. So different organization uses the different names, but the steps remains the same. So first thing, when I plan to buy anything, I need to raise a requisition, and that requisition note will be sent to the purchasing department. So once the requisition is shared with the purchasing department, now the purchasing department will do the analysis, like what quantity I need, by what date I need. So they will do the analysis and what prices I need. So based on my requisition details, purchasing department will do the supplier selection. That is the third step. So based on the requisition, purchasing team will find the suitable suppliers in the market who is offering at the best price, because some supplier may provide one laptop for 70K or 1.2 lakhs. So they will find, based on the requirement, they will find the suitable suppliers in the market, and whoever supplier is offering at the best price, at the best quotation, they will pick that supplier. And once the supplier is selected, so the buyer will raise now the purchase order. So fourth step is the creation of the purchase order. So once this find a suitable supplier, buyer will raise the purchase order. So once the purchase order is raised, so this purchase order will be sent to the seller. So once the seller receives the purchase order, so seller dispatches the goods. So once we raise the purchase order, this purchase order will be sent to whom? From the buyer to the seller. So once the seller receives the purchase order, he will dispatch the goods. And he just not only dispatches the good, along with the goods, he will also send the invoices, which have the description, quantity sold, along with the payment due date, payment terms. So once we receive the invoice processing team process the invoices. And then on the 7th, we will make the payment to the supplier. So this is how the P2P process works. First thing, again, I'll repeat, first thing, we will raise the requisition. This requisition note will be sent to the purchasing department. Purchasing department, based on the requisition, they will find the suitable suppliers. And once they find the best supplier in the market, they will raise the purchase order. Once the purchase order is raised, then the purchase order will be sent to the seller. And once the seller receives the purchase order, he will dispatch the goods. And once the goods get dispatched, he will also send the invoices, which have the payment terms along with amount due. So invoice team process the invoices, and the payment team makes the payment. So this is how the P2P process flow works. So that's all I have it for now. So in the next videos, we will discuss in details what entries processed by the invoice processing team and how the invoice processing teams works. Because in the P2P, we have like different sub teams, which we call it like the help desk team is there, invoice processing team is there, and GRIR, goods received, invoice received note. So all these teams work separately. So we will discuss in details about all those things. So this is what I have it for now. So see you in the next video. Till then, goodbye. Thank you.